Hi everyone. Sorry we took a couple of minutes to jump on there. Hang on. Yeah, sorry it took a couple of minutes there. We'll just give it another couple of minutes while we wait for people to join, which will take another minute or two. For those of you joining now, if you look at the bottom of your screen, you'll see a little box that says Q&A. You can just click on that box and open up the Q&A box. You can write in questions as we go. And what I'll do is I'll answer the questions in the relevant section as we go along, which will make it a little bit easier. I'll just give it another minute or two while we wait, and then we will start. Cool. Looks like a couple of you have already found the Q&A section, which is good. We'll just give it one more minute or another 30 seconds. Okay, let's get started. So first of all, thank you everyone for joining. For those of you that have joined previous ones, a lot of the material will be quite similar. For those of you that did join the last one, which we held just a couple of weeks ago, we're going through very much the same thing. So just letting you know in case there haven't really been any developments. So this is more of a back by demand for those that missed the last one, to go through that same material. So for those of you that are just joining now, at the bottom of your screen you'll see a Q&A button. The Q&A button will pick up or open up a little screen that you can write in your questions. Please ask the questions as we go, because I'll answer the questions in the relevant section while I can. I can see some of you have already found it and are asking questions, which we will be answering as part of the presentation. So that's good. Okay, we'll get into it. So first of all, well, I'm John Casey. For those of you that have joined previous webinars, you know about this already. Part of VirtueZone, part of TaxReady, and we are well into our filing process for thousands of companies. This is the last webinar I'll do before I go and hide away in a cave to do all the latecomers to the filing process. We've got a good number of clients who are just coming out of the woodwork now, realizing they do need to do something, which is understandable, but I will be very busy for the next little while. So I'm just going to share my screen. What we'll do, sorry, we've just had another 20 or so people join. So for those people just joining, again, I swear I won't keep repeating myself. There's a Q&A button at the bottom of the screen. If you click on that, it'll open up a little box and you can put in your questions as we go. I'll always try and answer the question in the relevant section. Okay. Now I shall share. Oh, sorry, everyone. I'm just, I'll try that again. There we go. Now that's worked. Okay. So look, we've now we've filed a good few thousand clients so far already. And we are very familiar with what the most common questions are or what the most common issues are. So what we'll be going through, obviously the basics, which people are still asking about, the big question of, what do I need to do and will I actually be paying any tax? And then what I'll do, I'll do a bit of a deep dive into the free zone exemption. There is a lot of confusion around who is exempt and who is not. So that'll get a bit more technical, but we'll cover off all of the sort of the basic stuff or the initial stuff to start. Okay, so the first big question is who is actually taxable? So who actually falls into corporate tax in the UAE? Very simple answer, every single company. And I can already see some questions here saying things like, I'm a very small company, I'm under a threshold. There's a big difference between who is taxable versus who actually pays tax. And when we say you are taxable, what that means is you have to go through all of the compliance steps for corporate tax, which is the same as everywhere else in the world. Okay, and the answer to that is every single company needs to go through these, these compliance steps, which I'll go through shortly. Okay, so the first thing every company needs to do, and most of you should have done this already, is register for corporate tax. Okay, there is a deadline of 90 days after you set up your company. So for those of you that started your company, years ago and you haven't registered yet, unfortunately, you'll be sitting on that 10,000 dirham fine. For those of you that have just recently opened your company and you haven't registered yet, obviously get onto it as soon as possible. There is a way to get it waived involved in which means you need to file your corporate tax return early, but that is the only way that we've found that you can waive this 10,000 dirham fine. So you absolutely have to register your company for corporate tax. Just do it as soon as you set up your company. It doesn't matter if you don't have any activities yet. It doesn't matter if you haven't, people ask, oh, but I haven't got a bank account or I haven't started selling. None of that matters, okay? As soon as your company is opened, you should go and register for corporate tax, okay? If you leave it too late, if you leave it more than 90 days, you get this 10,000 dirham fine. You won't know about the fine until probably a bit later, a bit further on down the track when they come knocking on your door and ask you why you haven't filed a tax return. Okay. The next biggest question, so once we've established that every single company does fall under corporate tax, the next question is, okay, well, when does this all kick in for me? Okay, so there is a difference between your financial year and your first taxable year. So the default financial year in the UAE is January to December. That is the one that the mainland and all of the free zones follow, with the exception of Dubai World Trade Center. Okay, so if you are a Dubai World Trade Center company, come and chat to us separately because you have a different financial year. Okay. But for the vast majority of you, if you're in every other free zone and mainland, the default financial year is January to December. So you've got a default financial year of January to December, but when is your first taxable financial year? Okay, and it's very simple. You will fall into one of three buckets, depending on when you opened your company. This might not make any sort of rhyme or reason, okay? This box or this table that you can see on screen right now. You just have to understand that this is the way that the rules are written, okay? And so if you fall into one, whichever bucket you fall into, whichever group you fall into, you need to be aware of when your deadline is. So if your company was opened up until or prior to June 2024, okay, so any time prior to that. So if you opened your company in 1994, or if you opened your company in 2016, or if you opened your company on the 30th of June, sorry, this should actually say up to June 2024. So even if you opened your company on the 30th of June 2024, your first financial year ended December 2024, and you've got that due date for your filing at the end of this month. Okay, so every single company that was open prior to or up until 30th of June 2024, you need to be filing a tax return by the end of this month. Okay, it doesn't matter if you haven't had any activities, it doesn't matter if you don't have a bank account, doesn't matter if you're under thresholds, you have to abide by that deadline. Okay. The second group, the orange group in the middle, if you opened your company between July 2024 up until 30th of June 2025, so up until June this year, right? Your first financial year ends at the end of this year, and so your first filing deadline is September next year. And then the third group, if you've just recently opened your company in the last couple of months, right? So from July this year onwards, your first financial year runs all the way through to the end of next year, and your filing is due in September 2027. Okay, so have a look. If you're unsure, if you opened your business, in the middle of last year and you're not sure the exact date, make sure you check your MOA, your Memorandum of Association. Check when the company was actually established. Check your corporate tax registration certificate, because that should tell you when your first filing is due. Okay. But these are the general guides to go by. So if you opened it prior to, up until June 2024, you have to be filing a tax return by the end of this month. So you've got 20 days to get that done. Okay. Before we get into it, I'll show this QR code at the end of the presentation, at the end of the webinar as well. I can see some quite detailed questions coming through around deferred income and things. We can't go, we won't go into hugely detailed questions on this webinar. But if you jump onto this Q&A, sorry, onto the QR code, you can book a free consultation, and one of my team will go through and see how we can help. I'll come back to that at the end as well. Okay, so we've just covered sort of the deadlines for the compliance steps, but I just want to reiterate what every company must do. So you have to register for corporate tax, you need to keep proper accounting records, and you need to file a return. Okay, this is the same for every single company. So I can see questions here. Tom, you're saying I've got a made-owned company, hasn't conducted any business activities. Do I still need to do corporate tax filing? Yes, absolutely. So if your business has not had any activities or is zero revenue, you need to prove that to the FTA, to the Federal Tax Authority. Okay, so corporate tax is the opposite of VAT. So in with VAT, you only have to do something if you hit a certain threshold or if you're doing a certain activity, right? Corporate tax is the opposite of that. Okay, so with corporate tax, every single company is assumed to be a taxpayer. Okay, so you have to go and register, you have to submit financials, and you have to file a tax return. Okay, and if you are not going to be paying tax, what you submit has to prove that. Okay, so Tom, I hope that answers that. Christopher, I think you had a very similar question. It's a really small company, no business, but I did the registration. Yes, you have to file because you have to prove that you don't have any tax to pay. Okay, I'll go through what we mean by keep proper accounting records shortly, but this is sort of the minimum requirement for every single company. Okay. What do we mean by keeping proper accounts or doing proper accounting? So the general accounting standard that sort of underpins corporate tax in the UAE is International Financial Reporting Standards, or IFRS. There are a couple of allowances depending on how big the business is, but it doesn't matter which sort of version of this standard you use, you still have to produce real accounting reports. Okay, so you need to have a profit and loss statement, a balance sheet. You need to actually have proper accounts to support your tax position. If you haven't done any business yet, if it's still not active, then sure, that will probably just be blank. But you need to be able to submit those to the tax authorities to show that there's been no activity. Okay. I guess the main point here is you can't just send through some bank statements. You can't just write somewhere, oh, I didn't do anything, right? You need to actually have the proper documentation in place. There's quite heavy penalties for not doing this. Okay, so if you haven't kept proper accounting records, you get a 10,000 dirham fine once if the FTA discovers this. And then if you can't fix it, so if you can't go back and if you can't go back and do the records, that fine increases to 20,000 dirhams. So you're probably starting to get a picture here of what happens if you don't do anything for corporate tax, right? So if you missed registration, you haven't done any accounting, then your starting position is fines of around 30,000 dirhams. A question here, so how can we prove to the FTA that our company did not do any business? Okay, so you have to provide accounts that just show nothing. Okay, so the fact that you've done accounting properly, and by the accounting records you show that you haven't actually done any activities. Okay, that is how you show the Federal Tax Authority. You can't just write them a note saying, oh, it's not active yet. Okay, you need to go and you file a tax return, and in that tax return you show that you have no activity done. Okay, with accounting requirements, another question here around audit. So you don't have to do an audit for your tax return, okay? In most cases. You do have to do an audit if your revenue is more than 50 million dirhams, that's 50 million dirhams revenue, or if you are applying for the free zone tax exemption. Only in those two cases do you have to do an audit for your tax filing. If your revenue is below 50 million dirhams and you're not going for a free zone exemption, then you don't have to do an audit on your accounts. You just have to ensure that your accounting has been done under the correct financial standard. This is why, as with the rest of the world, you should be using an accountant, a certified accountant to be doing this. You can't just put it in an Excel sheet and send it off to the FTA. Okay, I think a good way of looking at it is, as you'll see shortly, there are a number of exemptions and relief rules that the FTA has in place. That means that you wouldn't be paying tax, but in return, they expect that you do your accounting properly. Okay. All right, a few more questions coming in here, so I'll go through them. So, small business with annual turnover of 350,000. Do I need an audit? No, it's not. You don't need an audit if your revenue or your turnover is under 50 million, unless you are going for a free zone exemption, which we'll go through shortly. Antoine, whatever your revenue is, yes, I would recommend that you go through a third-party accountant to get a proper financial statement, unless, of course, you have your own in-house financial accountant. Okay. All right. Now the big question. Will I actually pay any tax? So there are a number of exemptions available to a business before they end up actually paying any tax. The first exemption is called the qualifying free zone person, and I'll go through this one in detail. That is basically an exemption which is available to free zone companies if they are doing certain activities. Okay. I'll go through that in detail, but I'll just walk through the levels first. So if you qualify for that free zone exemption, great, you don't pay any tax. If you don't qualify for the free zone exemption, but your revenue is less than 3 million dirhams, then you don't pay any tax. Okay? If you don't qualify for the free zone exemption, your revenue is above 3 million, but your profit is under 375,000, then you don't pay any tax. So to actually end up as a tax-paying business, you need to fail the free zone exemption. You need to have revenue of more than 3 million dirhams, and you need to have profit of more than 375,000 dirhams. Okay, so think of it as different, there's multiple layers that you fall down through before you actually end up paying any tax. The most relevant one here, right, because the free zone exemption is quite specific and it's quite hard to qualify, especially for small businesses, okay? The really key one here is small business relief. So if your revenue is less than 3 million dirhams, you don't pay any tax, okay? It doesn't matter if you're in a free zone or mainland, this relief rule is available to everybody, small business relief. So if your turnover, your revenue, under 3 million, great, no tax to pay, okay? This rule is just in place for the 2024, 2025, and 2026 tax years. And then we don't know what will happen in 2027. All we've been told is that the rule is in place for the first 3 tax years of the regime. So 24, 25, 26. After, in 2027 onwards, who knows? They might extend it, they might remove it. We're not sure. Okay, the free zone exemption. I'm just going to jump through to the sort of summary and then we'll come back. So you'll notice that I mentioned the qualifying free zone exemption first as the preferable way or the preferable exemption. The reason there is that if you qualify for the free zone exemption, that exemption carries on indefinitely. Okay, so small business relief is only here for 3 years and then it disappears. The free zone exemption is here indefinitely. Okay, so if you can qualify for the free zone exemption, you want to do that, even if it means getting an audit, doing a bit more administrative work, because if you get the free zone exemption, you can continue being exempt every single year. Okay. However, if you opt out of the free zone exemption, okay, you cannot opt back in. You can't go back in for a further 4 years. So you need to sit out for 5 years total. So obviously what that means is that if you qualify for the free zone exemption, you get that, you're exempt indefinitely. If you decided to go for small business relief instead, you'd be exempt for 2024, 25, and 26, but then you'd have to sit out for 2 years, right? So you'd be paying tax for 2 years before you could go back to the free zone exemption. So you'd have a gap because of the way the laws are written. Summary of that is if you can get the free zone exemption, you go for it. But if you can't, no worries, you go for small business relief now. Okay, a question here. What if the revenue is lower than 3 million, but the profit is higher than 375,000? Okay, so you'll see along here, right, on the screen, the moment that you meet one of these criteria, you stop there. Okay, so if you qualify for the free zone exemption, right, that's where your tax stops and you don't pay any tax. All right, you don't even need to worry. You don't even look at the revenue. You don't look at the profit. Okay. If you don't meet the free zone exemption rules, then you look at small business relief. So if your revenue is less than 3 million dirhams, great, you stop there. You don't even look at your profit. So your revenue could be 2.5 million and your profit is 2 million, okay, but you don't pay any tax because the moment that you establish that your revenue is under 3 million, that's where you stop, okay? No tax to pay. It doesn't matter what your profit is. It's only if your profit is over 3 million that it's only if your revenue is over 3 million that you will start looking at your profit to pay tax, and you'll only pay tax on the profits over 375,000. Okay. So let's go through the free zone exemption. Oh, actually, sorry. I've got a few questions here on small business relief. So I'm just going to jump back. So just addressing a couple of other questions on small business relief. So it doesn't need an audit. Okay. Again, you only need to do an audit if your revenue is 50 million or above. Okay. So by definition, you don't need an audit for small business relief. And yeah, it's available to every company. So it's not just, it's free zones and mainland. Okay, let's go through the free zone exemption. And then I'll go through an example, and then I'll do a bit of a deep dive on the rules of the sort of the technical stuff around the exemption. So the basic way to look at the free zone exemption is the first rule you can look at, think of it as a geography test. So if your clients or your customers are all UAE free zone companies, okay, then you meet that criteria for the free zone exemption. Okay, it's called qualifying income. This is, I think I've only had one or two clients who actually meet this criteria. Okay, the clients that meet this criteria, they've got, one or two big clients only, and those two clients are also UAE free zone companies. Okay, so it doesn't count if the clients are outside the UAE. That means they're outside the UAE free zones. That means that it's not, it doesn't meet this test. Obviously, if you go into the UAE mainland, then this test isn't met either. So, lots of companies, let's say you're registered in a free zone like a Meydan or a Raquez, and you've got clients who are over in Europe, you're providing services, that doesn't meet this criteria because your clients are outside UAE free zones. Okay, so that's the first of two criteria under which you can qualify. Think of that as the geography test. So are my customers all located within UAE free zones? The second criteria you can look at, or the other criteria, and you only have to meet one of these, okay? So either you're just doing business with other UAE free zone companies, or if you are going outside the free zone, you have to be doing a qualifying activity. So inside the free zone, right, you can be doing any kind of activity as long as you're just selling to other UAE free zone companies. If you're selling outside UAE free zones, you have to be doing a qualifying activity. What do we mean by a qualifying activity? Okay, so this is the list here. Right now, what I've done, I'm going to go through a bit of a flow chart where you can try and assess yourself as to whether you are doing a qualifying activity or not. Okay, so these are into different categories, all right? So one category we look at is, do you sell physical goods? All right. So if yes, if you don't sell physical goods, then you won't meet this criteria, but that's fine. We'll look at we'll look at the others. Okay. Do you sell physical goods? Yes. Do you manufacture or process the goods yourself? No. Okay. Is the good a commodity? Are you trading a commodity such as gold, coal, coffee, any of those recognized commodities? If yes, great, you probably meet the criteria. If no, the next thing you can look at is whether you are registered in a designated zone and you sell B2B, so you sell to distributors, okay? If yes, then you may meet this category. If no, then you probably don't meet the criteria under the physical goods category. Okay, so this is just sort of a guide to give you an idea. If you think you may qualify under one of these criteria, obviously you'll need to go through all of the quite complex steps of filing under the free zone exemption, but these tests that we're going through give you an idea of whether or not you may qualify. So physical goods, if you manufacture or process the goods yourself, or you trade commodities, or you are registered in a designated zone, then you may qualify for the exemption. Okay. The next criteria you can look at, or the other category you can look at, if you're doing services. So if you're providing services, if it's logistics, great. It will probably be a qualifying activity. However, logistics is very tightly defined, and you can see the list there. Are you providing, if not, are you providing financial services which are licensed under, with a financial services license? So I don't mean, if you're providing financial services because you've got a free zone license, which says, investment or something, it needs to be actually licensed by the professional body. So the DFSA, for example. If not, the next thing you look at, unfortunately, all other services, so management consulting, IT services, marketing, online courses, project management, everything else is not exempt. Okay, so pretty much all services apart from logistics and licensed financial services are not exempt. Okay. Everything else, all right? And this is where I've tried to kind of shoehorn a few criteria into one diagram. So hopefully this makes sense. So do you just have a holding company? So if your company is just here and it just owns shares in another company and you hold those investments for 12 months or more, or intend to, great, you will probably meet the criteria for an exemption. If not, okay, do you just do related party transactions? So do you just, if you live here and you've got a company here which just charges management fees to another company that you have overseas, or you've got a headquarters here that does financial service, or, payroll and accounting for your other companies, things like that, right? You may qualify for the exemption. And then the last one, this is where the UAE has just kind of selected some industries that they like. So if you're in the aircraft or shipping industries, and when I mean that, are you financing or owning or operating aircraft or ships, then you may qualify for the exemption. Just some general rules around, or general overview around the exempt categories or qualifying activities. Normally, what's not included, it never really includes things like brokerage of services. So people get a little bit confused when you're looking at, especially, so travel agencies is a classic example, right? So, so people that are organizing wherever, such as Dubai, we have some clients who facilitate private jet bookings, right? And they take a brokerage fee, or they get a commission when someone books a private jet. Now, even though that is in the aircraft industry, they are not actually the ones either financing, owning, or operating that aircraft. And so even though it is directly related to an aircraft, they're effectively acting as a service or a service broker, so they don't get the exemption. Okay. I hope that all sort of makes sense. It's a very complex part of the law, so I have tried to, drill it down into these categories so you can go through and actually work it out. If you think you may qualify under one of these criteria that we've put through here, please reach out to us, because, like I said, if you qualify, or if you think you can qualify, you need to get onto that, get the tax return in properly so that you get the exemption. There are other hoops that you need to jump through. So you do need to show things like adequate substance. You do need to get an audit for a free zone exemption filing, all right, which does take a little while. But you want to do that because, remember, you will be exempt indefinitely if you meet the criteria. Okay, so If you're looking at this going, yeah, I probably am qualified for the free zone exemption, but it sounds like a bit too much work, don't be put off by that, because if you go for small business relief instead, you've only got that for a few years and then you'll start paying tax. Okay, we're going to jump through, I'm going to just kind of work through an example. Okay, so let's say that you're a free zone company. Let's say you're in Maidan, right? And you have a marketing consultancy. Okay. First thing we look at is whether you qualify for the free zone exemption. Okay. Now, if you're a marketing consultancy and you just had one client who was in Dubai Media City free zone, right? You would meet that first criteria. Remember the geography one, right? So you'd meet that first criteria because you just sell to free zone companies. Okay. But that's pretty unrealistic. Most marketing, let's say you've got a marketing consultancy, but all of your clients are outside the UAE, or you've got clients outside the UAE in the free zone and in the mainland, right? So you don't meet that first criteria, the geography test. Marketing consultancy is not a qualifying activity. Okay, so you wouldn't meet the second criteria. Okay. And so the next thing you'd be looking at is small business relief. So if you're a marketing consultancy, clients, all over the place, outside the UAE, inside the UAE, if your revenue is under 3 million, great, no tax to pay. You would stop there. Okay. But let's say your revenue is 4 million dirhams. Okay. So you've missed out on the free zone exemption. Your revenue is 4 million. So you missed out on small business relief. Okay. So then we start looking at the profit of the business. And let's say on 4 million of revenue, you've made a profit after your expenses of 1 million dirhams. Okay, the way it works is that with that 1 million dirhams of profit, you pay no tax on the first 375,000 dirhams. Okay, that's the tax-free threshold on profit. So your 375, you pay no tax, and it's the remaining 625,000 that you'll pay the 9% tax. 9% tax. Okay, so you'd end up paying 60,000 dirhams on 1 million dirhams of profit. Okay, just a couple of other things I want to sort of discuss. So when we are looking, so using that example of a marketing consultancy that's turning over 4 million, all right? The biggest expense that people are looking at for their businesses here in the UAE is the salary being paid to owners. Now, this is probably one of the most common questions that I get. Owners saying, can I just pay myself, a big salary? We have no personal tax here in the UAE. And so any money that you pull out as a salary is deductible in the business. Okay, so it's a deductible expense, but then it's not taxable when you receive it as a salary. Just keep in mind, salaries are different to dividends. Okay, so a salary you pull out as a payment for the services that you do in the business. A dividend is a payment out of the profits after you pay tax. Okay, so dividends are not a deductible expense, only salaries are deductible. So there are two elements to this question of owners paying themselves a salary. The first element is, are you actually entitled to pull a salary out of your own business? And what I mean by that is, do you have the right documents? Do you have the right compliance, for want of a better word? Do you have the right position so that you can actually get paid a salary? And what I mean by that is, do you have an employment contract, right? And do you have the right visa so that you can get an employment contract with your own company? Now, this will vary between free zones, okay? A general sort of rule is, if you look at your Emirates ID and if it says occupation or position as investor, you're the investor of your company, normally that will mean you can't register an employment contract through the free zone. Okay, so you'll need to chat to your free zone, okay? Or if you're a virtual zone client, obviously speak to us, right? Because you need to get an employment contract registered through the free zone, because that is the document that says yes, you are entitled to receive a salary from your company. Okay. If you're just the investor in your company, you don't have an employment contract, you can't receive a salary. Okay. So any payments that you take out of your company will be dividends, and those will not come off your, those will not come off your taxable profit. They are paid after you pay tax. So think of that as phase, or as the first element of this paying yourself a salary question is, get the documentation in place correctly. The second element of this is how much can you actually pay yourself? And this is where we don't have any specific guide from the Federal Tax Authority. So there's nothing like, the tax authorities haven't said, oh, you can pay yourself 30% of profit or anything like that, okay? They have just said it is on a case-by-case basis, and it needs to be the payment to any connected person. So connected person is the owner or directors or anything like that. So any kind of payment of that nature needs to be at market value. So what that means is if you are paying yourself a salary from your own company, that salary needs to reflect what you would get on the open market. Okay, so with a marketing consultancy, if it's just you and maybe you've got a few other employees, you'd be looking at, okay, well, what does a partner in a marketing agency earn or something like that, right? You need to have some kind of benchmark or some kind of indication around how much you should be pulling out of your company as a salary. Obviously, if your company is earning 1 million dirhams of revenue, you can't go and claim, pay yourself 1 million dirhams in salary and put the company into a loss, right? So it all needs to be reasonable. It all needs to be above board. It needs to be, market value or arm's length. But that's the second element, right? So you need to have both in place. You need to make sure that you are in the right position, right? That you've got the documentation in place so that you can get an employment contract. I've got a few questions coming through around visas. So yeah, if your visa is under your company, then you probably just need to check your Emirates ID and check what position you have currently with your company on your Emirates ID. If you don't have a visa associated with your company, so if you have, if you're on a spouse's visa or if you are on a golden visa under property investment or something like that, right? Then you can go and speak to your free zone and see if you can, and just check if you can get an employment contract registered with the free zone. So it will vary by free zone to free zone. We know some will allow you to get an employment contract if you're registered if you're shown as the investor in your company. Some don't. Some require this. Some require that. So your first step, is speak to your free zone, okay? Because unless you have an employment contract in place, then you don't really have the documentation. Should the FTA come and ask you to prove, or justify the salary. Okay. Another big thing that is coming up, which is a bit unfortunate, is around closing of businesses. Now, this is where we have seen, apart from the registration fines, the next area where we have seen the largest fines is around people closing their businesses. Okay, so if you are going to close your business, or if you know someone that is closing their business, okay, you need to remember that just like the rest of the world, closing a business, the hardest part now is getting your tax clearance, okay? It used to just be that, you would, deregister with the free zone and that was it, you were done, okay? That is no longer the case, okay? The hard part of closing a business is now getting your tax clearance. So if you are closing a business, all right, obviously you still need to have registered for corporate tax, okay, if you haven't already. So you'll need to register for corporate tax. You'll need to file any outstanding tax returns. Then you will need to file a tax return for the current period up until when you close the business. You'll need to pay any tax which is due on any of those tax returns, and then you can deregister for corporate tax. And only once the Federal Tax Authority, acknowledges this, have you actually fully closed the business. There are deadlines around all of this. Okay, so we have seen people that never registered for corporate tax, never filed tax returns, never paid tax, and then never deregistered for corporate tax. Okay. And they've come to us and they said, "Oh, I just closed it, 3 months ago, or I closed the company 6 months ago. Now the FTA is asking for all the stuff." And the starting position here is there's a 10,000 dirham fine for late registration. There are fines for late tax filings for the previous period. There are fines for not paying tax, and there's a further 10,000 dirham fine for late deregistration for corporate tax. Okay, so it gets very, very messy. This is, one of the riskiest things, and the FTA does not accept, I wasn't aware, or even a zero revenue company, even a inactive company has to go through these steps because you need to have tax clearance from the FTA. So please, if you are shutting down your company, or you know anyone that's closing down their company, please make sure they are aware of these steps. They have to go through all of these steps to get to close it properly. Okay, look, I'll just explain a couple of other questions that I've seen coming through. I'll jump back to the Q&A piece. All right, freelance licenses. Okay, so if you are a freelance license, this part relates to you. If you don't have a freelance license, so everyone else, everyone who has a company, please block your ears because I do not want this to confuse anybody, okay? So what I'm about to say only relates to freelancers or sole establishments, okay? So Anna, if you have a freelance license, you do not have a company, okay? You have a license to run a business as yourself. There is no separate legal entity, there is no company, okay? A freelance license, you only have to register for corporate tax if your annual revenue, your revenue over the year hits 1 million dirhams, okay? And at that point, you become a taxable business, okay? Please, no one else get confused by that. Everyone else who has free zone companies and everything, that 1 million dirhams does just ignore that. This is just for Anna, who asked the question around freelance licenses. You only fall into corporate tax if your revenue goes over 1 million dirhams. Okay, let's see some other questions. I'm just trying to run through them. Alexandra, yeah, if you closed your company last year, you still need to do all of those tax steps. Unfortunately, you may be sitting on some fines. Yeah, if it was closed last year, unfortunately, you would have gone past your registration threshold. You may still be able to avoid fines for late filing, depending on your tax year, but you'll certainly have a late deregistration fine as well, and then you'll have late filing fines for the final tax return, which is a bit unfortunate. Salim, question here. Can we file corporate tax earlier than the deadline? Please file your corporate tax earlier than the deadline. If you've just recently registered your company for corporate tax and you received a 10,000 late registration fine, if your deadline for filing is September next year, right, you can get that fine waived. But please, there is absolutely no point in waiting until September to file your tax return, okay? I honestly thought I would see more people filing earlier because, there's been so much, I think it's been very public around the requirement, but we're still getting so many people coming in through even now asking us to file their tax returns. So, look, for example, we're probably going to close our doors to depending on how much work is involved. At some point, most accounting firms are going to say, have a cutoff saying, look, if you come to us after this date, we can't guarantee that your return will be filed by the 30th of September. Okay, so please do not wait. Everyone is aware of the deadlines. There's no real excuse. Okay, sorry, I'm just doing another scan through before we sort of finish up. Oh, here's a good question. Nias, so an earlier question was, a company got, so the company billed a client in Saudi, and the Saudi client deducted 15% withholding tax. You can get credit in the UAE for things like withholding tax, okay? But it only matters if you actually have tax to pay. So for example, if you're under the 3 million dirham, if you file for small business relief, you don't have any tax to pay, so therefore it doesn't matter. You can't claim foreign withholding tax against a tax bill of zero. Okay, question from Tatiana. On filing earlier, what's the earliest you can file if the deadline is September next year? Okay, so the Federal Tax Authority won't open the portal for filing until the end of the financial year is finished. So let's say if your deadline for filing is, or let's say your tax year finishes on December 2025, okay? 1st of January 2026 is when the portal will open for filing. Okay, Ahmed asking about audit requirements. So audit is only required if you are if you're going for that free zone exemption that we went through. So it's an additional requirement, or if your revenue is over 50 million dirhams. So Ahmed, you're selling online products through Amazon. So I assume that means you're selling outside the UAE free zones. I doubt that you are selling qualifying activities. So if your revenue is under 50 million dirhams, you don't need to do an audit. Okay, you just need to ensure that your accounts are done correctly under international financial standards. Okay, there's a few more sort of complex questions around US VAT and things, it's quite a lengthy answer. Question here, Laureline, sorry, I know you've had a few questions throughout. Okay. So the question around, okay, if I have losses to carry forward, but I am under the small business relief, under the small business relief threshold, it really depends on how high your losses are. So generally, if your losses are more than sort of 75,000 to 100,000 dirhams, okay, you probably want to carry those forward, which means filing under a standard, a standard filing. So keep in mind that you can only carry forward 75% of losses, right? So if you have 50,000 dirhams in losses, you can carry forward, call it 32,000, all right, and through to the following year, and you'd only save 9% of that. So you're not talking about much of a saving, and the additional costs and things in terms of actually filing a full return kind of offsets that. So I would only really bother if your revenue is under 3 million and your losses, if you have losses but they're less than 100,000, it's probably easier just to file under small business relief. If you've got losses higher than, if you're 75 or to 100 or above, then you probably want to carry it forward. So Laureline, you've just added some more comments here about the size of the loss. I'd probably recommend carrying that forward. Yeah. I just want to check, Laureline. I know you're your client, so we can chat about it separately. But the losses are in terms of tax, right? There's nothing against you filing for a loss. The only reason you might run into issues in terms of the FTA asking questions about the loss is if you are in a loss position due to paying the owners huge salaries, right? So if you have turnover of, let's say you have 1 million dirhams of revenue, and then you claim that you've paid the owner 1.5 million dirhams in salaries, and you're claiming a loss of 500,000 dirhams, like that's completely unrealistic, right? That would never happen in the real world. So, so that's when they'd have an issue. Okay. All right. I'm just going through one more question. Uzair, your question, you probably need to reach out to us directly on it. That's just a question around deregistration. yeah, the deregistration, it's either 30, sorry, I can't remember off the top of my head. It's either 30 days or 90 days from when you cancel the company to actually put in the deregistration in the tax, the tax portal. Okay, look, I think we'll probably finish there. You've got the QR code there. I'll give you 10 more seconds to scan it if you need to. Again, more questions. If there's stuff that is still outstanding, please jump onto that QR code, book a session with us. We can help. We'll obviously help however we can. We won't be doing another webinar before the end of the month because, like I said, I'll be hiding away in a cave filing all of the latecomers to do tax returns. So we will see you on the other side of the deadline. Yeah, again, thanks for coming. We'll probably do another webinar later in the year, but good luck for those of you who have not yet done anything for your tax filing. We've got 20 days to do it, so best get in touch. Thanks. Bye all.